Hello, everybody. Happy Thursday and welcome to the Gold Rush. I'm Sam Gatlin, editor of the Gold Rush, joined by my esteemed colleague and co host, Mr. Jason Perz, coming to us live from Baltimore. Are you going to eat some crabs today or what?
Not much of a crab eater, man.
Ooh.
When you grow up in the 90s, crabs have a pretty negative connotation, Sam. So,
I
we just
think
don't
they
know.
still have a negative connotation today.
But I know I've never. I was just telling them today we went out and got sushi, and I got something very normal, and they were like, what? Why don't you eat that? I'm like, I don't know anything about any of it, really. I have no idea, no idea.
Yeah,
But
they have the
sorry for
weird
being late,
crabs there in
guys.
Baltimore too. I think they're the blue crabs, if I'm not mistaken, and those are the crabs like with all the guts everywhere. I'm more into like the king crab with fewer guts on the plate. That stuff's just kind of off-putting to me, but the meat is very
Sam,
tasty.
I'm an East Cleveland kid. I never saw anything like that my whole life growing up.
Well, I'm a Kansas kid,
I
Jason.
know. So you got some cool stuff out there, man.
Totally.
We East Cleveland, it's like barbecue. You got barbecue. That's pretty high end up here, man. So
Yeah, same here. And
I love barbecue.
we have my brother, actually, Elijah, in the chat, chiming in about cattle. Someone's excited about the cattle futures. I mean, that trend has been going on for months, years really at this point, but that's an epic uptrend in cattle futures, both live and feeder. I think the lean hogs are up next. I think that's a super interesting
They're
place to
already
look.
moving. They're
They
moving.
are. And right now, metals and mining, the XME, we've been talking about this a lot recently, but if you're at your desk, pull up a chart of XME because wow, what a gap and go we've seen in that. So there's a lot happening in commodities and precious metals and bond markets and Forex and all of that. So we're going to talk about that today. So let's just get right into it. If we can pull up slide number 2 here, we've got commodities as an industry group, or that's probably not the right way to put it, as a group as a whole. You have, so this is an equally weighted basket of all of the futures except for gold. So you have like crude oil, heating oil, natural gas, RBOB. You have all the energy. You have all the softs like cocoa and sugar, coffee. And you have the grains like corn, wheat, soybeans, soybean oil, all of those. And if you equally weight all of those together, this is what it looks like, Jason. Does this look bearish to you?
Extremely, Sam. The commodities. I have a huge take today. The commodities are all dead. I'm just kidding. The commodities really look good, and this is honestly and Sam put this chart up. I haven't seen it yet. This is a perfect way of looking at this. That you're looking at a huge setup. You're looking at a massive base. Sam, what is the thing we've been buying this entire cycle ever since 2022? These massive base breakouts over and over again. Like you see these massive bases. If you look at ARK, it had a base like that. You look at China, it had a base like that. You go down the list at anything we've bought in the last couple of years, it looks like that, and it's made a lot of money. This is telling me that probably commodities are next. X gold, probably copper, probably oil leading the way. The ags. We talked about cattle. I love that your brother brought that up. I have been long feeder cattle for so long, and I have been talking about it as I'm long feeder cattle. I've been like, this trend has to end. Wheat's going to catch up, and corn. The reason why I say corn and things like soybean meal when I'm talking about cattle is because that's what feeds the cattle. So usually these are very inversely correlated. So when corn goes up, cattle goes down. And so I've been looking for the grains to catch a move. But if cattle stays this strong, it's going to be very hard for corn or soybean meal to really catch a bid. But it'll probably happen at some point, and I think this chart's kind of pointing to the fact that that shift is going to happen soon. I like the meats though. I'd still say I know not a lot of people are trading the futures, but I'm still long feeders. I'm still long live cattle. I'm still long lean hogs. If you guys are on my channel, you guys can see that stuff as well. But yeah, like this is a huge trend that's just getting started. I really like this chart.
Totally. And, I think this is a really interesting chart. So you have the same thing here. You have commodities X gold, but you have it overlaid with that index relative to gold. And that's the blue line here in the bottom. And you can see historically they've both bottomed together. And right now you have the blue line crashing to new all-time lows as gold has been an absolute beast since March 4th of 2024. But look at the commodities X gold index up here. It's pressing against the upper bounds of a multi-year bearish to bullish reversal pattern. It's not crashing like it did all of the other times, Jason. So what do you think about that? It's to me, that's relative strength. That is the market's way of telling us this is a very strong trend. And if, God forbid, this base resolves higher, it's going to absolutely scream higher.
This really speaks to your ability to find good charts. Like this is a chart that really speaks to me in a lot of ways, and it should speak to everybody watching this. And one of those reasons is when you're looking at the commodity cycle, the way it works isn't how everybody thinks, and it's not even how anybody knows because it's always a little bit different each time. But the one thing we do know is usually gold leads the way. That's one thing we know. Gold always leads the way most of the time. But then when it starts to stall out, what happens? Well, that doesn't mean gold crashes. That means things like the gold miners start to move, silver starts to move, copper starts to move, and then finally oil. And a lot of the commodities X gold type of indexes are very heavily weighted in energy because there's so many energy products and that trade like energy. Even grains trade pretty similarly to energy. So looking at this and saying like, hey, we're kind of bottoming out here, we could go higher. That screams like $100 oil at some point in the next year. That screams like, hey, soybeans will probably bottom. Because really, the only thing's really missing from the commodity cycle right now, because everybody's like, oh, commodities are dead. Absolutely not. Commodities are going nuts. The only thing that is dead is energy and the grains. And if we saw energy in the grains and maybe sugar's a huge indicator for me for stagflationary periods. And so if we start to see sugar, we start to see wheat, we start to see oil, heating oil, gasoline, this thing's going to take off. And you're going to want to be in those things moving forward. And that's where money's going to be made the next time. Everybody's been so excited about gold, and gold has been great. But there's going to be another trade. There will be new trades. And so this chart really speaks to that. Love that you brought this chart, Sam. This looks great.
100%. And yesterday I tweeted out that in technical analysis kindergarten, I learned a very powerful lesson that in bull markets, the leaders, or excuse me, the laggards catch up to the leaders. And in bear markets, the leaders catch down to the laggards. We've seen that throughout history. You can go back to ancient Rome. Every single market cycle, that's exactly what happens. And, I think this is a commodity super cycle that was led by gold March 4th, 2024. And I think the rest of the commodities are going to participate. And I think it's tough to find a group that's worse than energy right now. That's just been dead sideways for years now. Nobody cares about it. Nobody wants anything at all to do with energy. That's when I get interested. But Jason, something that people are interested in right now is copper futures. So the tariff
Wait,
man came
Sam, what copper? We haven't talked about copper at all in like years. What are you bringing this copper chart up for? Oh wait, we talk about this every week.
every single week. Yeah, this is front and center for us. This is an incredibly important chart. This is Dr. Copper. This is the doctor of the economy. And here it is with its best day ever, Jason, ever. Never has copper had a better day than it did. When was that? On Monday? Tuesday? Let's
Tuesday,
see.
I think it was.
Tuesday? Yeah, I'm pulling up my data now. Yeah, it was Tuesday. I think it was after the market closed. Donald Trump. No, it was not. It was
No,
like at
the market was
lunchtime.
open because it
Yeah,
was like around lunchtime. Because I
yeah.
remember like I never look at my and this one thing that I do always is I never look at my account I really try not to look at the account. I don't want to see the money moving up and down. It drives people crazy. But I remember clicking on an accident and going, oh, I'm going to get out of that, and going, what? Whoa, what's going on with copper? And copper
I
was
thought
up
it was
like
a glitch with my
70%.
data. I
Yeah.
didn't believe it. But it
It was
turns out the
crazy.
tariff man came out and is trying to put a 50% tariff on all copper. And, the market loved that news. It marked the decisive resolution of a multi-decade base in copper futures. And you can overlay this with gold, and you can see clearly here that over longer time frames, copper and gold don't really trade in opposite directions. They tend to dance together, and they both have massive structural basing patterns. And gold has already broken out. We all know that gold's been an absolute beast, but copper, it's been dead money. Still, even though gold has been making new all-time highs for about a year and a half now at this point. So we've been betting that copper is going to catch up to gold at some point, but we just needed to see it. I'm a show me kind of guy. Like I can have all my opinions, but at the end of the day, nothing matters but price and what the market's opinion of something is. And until this point, the market's not really been interested in copper, but that's changing now, Jason. The path of least resistance is now higher for copper futures after several decades of just nothing.
Oh yeah, and I love the look of this. One is because this is how a commodity cycle works, and this is a great chart to show you guys that looking at gold starting to bottom out back in the 2000s. This is basically 99. You see that big spike bottom. You had oil hitting single digits at that point. Gold had one final low, and then gold bottomed out very quickly, started to move higher. The next thing you know, copper started to move higher. That'd be around '03. Now, what happened in '03? Well, we came out of a huge recession. After dot-com bubble, US was in a recession. '03 happens. Finally, we come out of that recession. Copper's telling you that's the reason why we call it Dr. Copper. And then we have this massive uptrend in gold, and gold just kind of bucks everything kind of going on at the time. Yes, you had 2008 happen, but gold has a little pullback and just keeps ripping higher. Copper had a huge pullback, and this is what we call a liquidity event. And why I always highlight this, and I might talk about this a little bit too much, but it's important because when you have liquidity events, everything is going to sell off and it's going to mess up the data just a little bit. But commodity cycle keeps going and gold starts to make new highs. Copper falls over first, then gold falls over last. Very rare for that to happen, but that's mainly because of the liquidity event and the market environment changed so much. Now we're in an environment where gold is leading the way. It's just getting started. I think copper is just getting started. Sam said something on a show with me and Kevin a long time ago. He said, I think copper is going to $10. And Kevin kind of bet against him at the time. And thinking back to that point, absolutely copper could hit $10. Commodities double all the time, and people never talk about it. It's like copper could hit $10. Gold could get to 5, 6,000, 7,000. Sam has a target of 8,000. This could be the start of a major commodity cycle. So I love the way this chart is. It just kind of tells the story. Oop.
And then we have BHAV in the chat here, Jason. They said taco in all caps. Do you know what that means? Trump always chickens out. So what do you think about that, Jason? What's really sparked this move for copper? When it had its best day ever, it was fueled by this headline that Tariff Man was going to put a massive tariff on copper futures. So if he does in fact chicken out like he has been doing recently, how do you think that affects this trade? Does it really matter? Like, I don't
I
know.
mean,
This is like a very structural base. It seems to me like it doesn't really matter. But
you're
what's your
you're
opinion?
right. And another point is if you look at cycles and you look at market environment and then you look at price action, it's all the same thing, which means I don't care about, tariffs are always going to be out there, and there's always going to be fear out there. If you traded through Trump's first term, oh my gosh, there was, every other day. I mean, there was a whole year that every single day nothing came out but market up on trade hopes, market down on trade hopes every single day. There was trade wars going on all year long in 2018, 2019. But the market's going to do what it's going to do. And nobody can really make the market move the way they want it to. If it's in the right environment for gold and copper to move higher, gold and copper are going to move higher. Yes, there'll be periods of, oh my gosh, this was said on TV and it was scary, and there'll be a pullback. Think about silver. Sam and I have been posting about silver and gold and all this stuff, and we've had great trades in it. The second silver got hit by the tariff thing, that was Liberation Day. Everybody came out and was like, "Oh my gosh, you guys know nothing," And what did silver do? Silver bottomed right there and went up higher. Now it's at the highest high since 2011, or 2012. So looking at this, I always think there's always going to be people who say things, and really, like, I try to think about this as in life as well, which is, what can I control? I can't control what the president's going to do. I can't control politics most of the time at all. So what can I control? Well, I can look at the price action. I can see what it's doing. I can understand my models. I can understand the cycles. I can do that. And if you're trading on a long enough time frame, this is the reason why I trade on the time frame that I do. If you look at 2000s, you look at gold, you look at copper, you look at any of these commodities, there's huge moves that happen. And there's always shakeouts over periods of time. There's always a big pullback. There's always some news thing that came out, and you look at your portfolio and you're like, man, that sucked. That was a really hard day. However, if you're in a structurally bullish market and there's a bullish trend, stay long. Don't do anything but that. Keep it simple. Run a trailing stop, sit on your hands, and let it go.
Totally. Yeah. I love you're such a trend follower, Jason, and that's great, but sometimes you have to be contrarian, Jason. The copper to gold ratio has been falling for years. It's gotten absolutely crushed. But I, as a market technician, truly do believe in polarity, that the market has memory of these levels. And this is exactly where copper to gold bottomed during the great financial crisis, during the COVID crash. And here it is back at the scene of the crime. I think this is where you pick a bottom, Jason. You have that textbook bullish momentum divergence. This downtrend doesn't have any momentum left. So what do you think about that? Is this where you want to fight the trend, Jason?
So I would think about this differently. Like, this is, if I look at copper, you're not fighting a trend being long copper.
But you are fighting a trend by overweighting copper relative to gold in your portfolio.
You are. So this is just how I trade it. Now, everybody's got to trade it differently, but just how I'm trading it is, I'm long. I mean, this is going to be very, very in-depth and hard to understand. I am long gold. I am also long copper because they're both in uptrends. So,
but do you equally weight those positions? Like, I'm here to make the absolute
no, actually, I will tell you no, because the actual position that's going to be larger is going to be gold, because it's been in there for so long and it's compounding over time. But I'm totally agree with what you're saying here. So there's a difference in, here's what I'm doing as a trader, but here's what my analysis is telling. It's the same thing Sam is saying, which is the cycle might be shifting here. And if the cycle is shifting and copper is going to be the outperformer, that's going to be the one that leads the way. So I do agree with Sam on that point. And then also the copper miners look fantastic. Absolutely fantastic. They're ready to set up and go. Like, look at that. That is a huge, huge ascending triangle pattern that is ready to break out. And when this thing breaks out, like, it's going to follow copper. So I think people got to get the copper miners right on their radar. So many names that you and I list all the time. So many names that you've been putting out there just recently. I think that copper miners, chemical stocks, you've talked about that. Any of the material, anything in the material sector just looks amazing. But copper miners, that's something that you really got to keep your eyes on right now. That's going to go a lot higher, and I think it's going to happen pretty soon.
Totally. It's an amazing time to be a commodity investor. I'm having a lot of fun riding the gold rush Because there's always something to talk about, Jason. You know, it's
Oh,
never
we're
a
having a
dull
great
moment.
time, man. We are having a great time, and honestly, learning so much and getting to talk with Sam about this stuff all the time is so helpful to me, even as a trader, because I get to learn so much constantly and see things that aren't on my radar. Sam is always finding things that I'm like I didn't even think about that. So like you guys are very lucky to kind of have Sam pulling up stuff like this from time to time. As lucky as I am, that commodities X gold chart, man, that was phenomenal.
Thank you. And Jason, I want to ask you about the implications of this ratio. You know, before we were talking about, you know, should we overweight copper or gold in our portfolios? But, you know, more macro, how do you think this affects the economy? Because, like, historically, copper tends to outperform gold when we're experiencing economic expansion. And this ratio goes down when we experience economic contraction. So, what do you think about that? Because we also have this chart of the 10-year yield overlaid with copper futures, and they're twins, Jason. This is the exact same chart. So, with copper decisively breaking out, I think the bet is that the 10-year yield and bond yields just in general, not even in just in the US, but I think around the world, I think are about to enter a fresh leg higher. And I think that's going to be accompanied by tremendous economic growth.
Yeah, I think of these like the Mario brothers. You know, like one might be wearing green and the other might be wearing red, but they move very similar ways. And so looking at this chart, I really can't see a reason to think that yields are going higher. I can't see a reason to think that that's not going to happen. And if we look at the implications for that, like what are we looking at around the globe? So everybody thinks yields going higher, market's going to crash, everybody's going to die. Let's think about the last few years, basically since 2020. How has yields gone higher? How has that affected the stock market? Did it destroy it? Is the stock market dying every year? Was 2020 a terrible year for stocks, even though we did have a crash? No, the market actually ended up, I think, 14%. 2021, the market went up again. Energy was leading the way. This is all I'm saying about the yields moving higher. It doesn't mean that the market's going to crash, but it does mean that the market will continue to rotate the way we're talking about into things like commodities, even more so into even past gold. Gold will do fine and hold up well. But past gold, what does really well in rising rate environments? Well, the energy sector does. Well, let's talk about macro implications because this is the thing that you asked earlier. Are you more overweight copper than gold? In a way, yes, but let's talk about that. International stocks move best when we see global growth ticking. So global growth, what signals global growth better than anything else? Well, it's Dr. Copper. It's the whole reason why we call it Dr. Copper. So basically, I am kind of tilted that way where I am really, really long copper more than anything else, but it's not just in the copper futures. It's things like international stocks. It's things like shorting bonds. Yes, I know it sounds crazy. Everybody's like, oh my gosh, you're still shorting bonds. What are you, a dinosaur? It's so funny to think back in 2020, how many people were so mad at me that I even brought up the idea of going short bonds. I talked about the fact that it was March 2020 and they had that huge spike top. And I made a post about the fact that that was probably the blow off top for bonds for the next 20 years. And so many people got so mad at me about it. It was funny, but like thinking about that now is like, okay, it went down a long time. Can it go lower? Absolutely. What is copper telling you? Yeah, bond prices can go lower. Yeah, bond yields can go higher. So I'm still in the camp where we're going to see a new high in the 30 year. I know I'm betting against everybody else right now, but I'd rather be betting on the side of the trend. Because, like, look at this chart. Actually, Sam, go to the next chart, chart 9. If you look at that and you go, okay, from that bottom in 2020, we see this uptrend, and then we went sideways. If that was NVIDIA, nobody in the world would be betting against it right now. Nobody in the world. They'd all be like, oh, yeah, that's going to break out. I can't wait for that to break out. I missed NVIDIA the first time. I'll get it this time. But because it's bond yields and everybody goes, well, the Fed, yes, and this chart shows you the Fed can lower rates and the 30-year can go higher. 2018 is a great example of this. We had a if you traded during that year, you remember October, the market started to have a nasty drawdown. Basically, any earnings that happened were terrible, and all the big stocks like Apple, Facebook, Amazon at the time, they all went lower. But the Fed was raising rates into that environment. And so the Fed kept raising rates. And at some point, as you see, I think that was October and November, Fed's raising rates, and then the 30-year yield is actually falling. So
And that's
sometimes,
we've seen the exact opposite thing here, Jason, which is
yes.
fascinating because ever since the Federal Reserve started cutting interest rates, this 30-year, that's exactly when it bottomed and it's back at the scene of the crime, back at that peak from late 2023. So, we've already seen the 30-year go in the opposite direction of the Fed funds rate. So why wouldn't that continue? Why wouldn't it break out to new cycle highs? Maybe the Federal Reserve cuts once or twice this year. Great. I don't really care. That doesn't affect this trade. It's going to do what it wants to do. This is focusing on the long-term prospects of the economy, and the federal funds rate is completely not doing that at all. Like it's a very, very different vehicle fundamentally.
Yeah, and it's the one thing I wrote a paper, and it was on All Star for the bond report, and it was the Fed made a mistake, and this was all the way back when the Fed started lowering rates and yields started going higher. And the reason why is if you go back over time, I mean, you go all the way back as far as you want, but go through the 80s, go through the 90s, you'll see every time they make some sort of mistake like this, yields start moving a different direction, and either the Fed is forced to follow it at some point, or the market gets in major trouble because they're not following it. What happened in 2018 was the market was crashing. And if you guys traded through that time, it was pretty volatile. I mean, it was nasty. There was a short choppy period, and then we got into December, and then the market just broke every single day. Basically, Powell came out and he said, we're a long way from neutral, and basically signaling like we got to still raise rates a lot more to get back to neutral. And so the market just crashed day after day after day. A day Christmas happens, the futures market on Christmas Eve was actually crashing even more. And then it was December 26th. Powell comes out and he says, "Hey, we did it. We're done raising rates. We're neutral. We're fine. Everything's fine." Like magically, it all changed in just a week. And so then the market finally started to go up again. But once again, you see that's when they paused rates and then they started having to cut rates. So the Fed's going to listen to the bond market no matter what. They're going to have all these chairmans and they're going to have people talking to you, and they're going to talk in Fed speak, and nobody's going to understand what they're really saying. And at the end of the day, they're going to go whichever way the bond market is really telling them to go.
Totally. You have Wavy McFly in the chat here saying that you're totally right. He thinks that we're going to see double digit interest rates from the 7-year and beyond. So
Wow.
I don't
I
disagree with
like
that.
that call. That's a wild call, but I love it because it is possible. That's the thing about all this. Like, we're not saying things that are impossible. We're saying things that have happened in history, and that's what we do as traders. Like any technician, any good technician is a market historian as well, and understanding that price action that's happened in the past and the implications for intermarket analysis going forward. And right now, it's just telling us like, hey, yields are going higher. I'm not ready to call double digits, but I am saying that this is going to break out, and it's probably going to happen at some point pretty soon.
So let me frame the question like this, Jason. If we have copper trading at $10, is the 30-year above 10% in that scenario?
Whew.
I think that's the way to think about it. Like if copper is ripping, it's literally doubling. eh, the economy is probably doing pretty well. There's probably a lot of growth,
A
and
lot of
that is why
inflation,
you raise the 30-year yield.
a lot of growth, and a lot of inflation.
Yep.
That's the thing that would really do it. Because that's the thing. We're in the market environment we're in right now, and for you guys who know, I run a fundamental model, basically tracks growth and inflation. So looking at that, we're in a reflationary environment. Reflationary environment just means growth is moving up, inflation is also moving up. So if we globally look at that and go, okay, copper could continue to move higher, obviously that makes a lot of sense. Yields could continue to move higher, that makes a lot of sense. 10 and 10, I mean, 5 and 5, It's not really far off. So I think it's a wild one. I can't wait to see how that all plays out. I'm not ready to call it 10 yet, but that's an interesting way to look at it. I like that a lot, Sam.
Cool. Well, this is all we have for today. If you enjoyed what we had to say, you can click the link in the YouTube chat to check out All Star Charts Gold Rush. This is where we write about commodities, currencies, bonds, precious metals, energy, live cattle, cocoa, all of it. And, right now, we talked about it today. Copper futures are absolutely ripping. So, you know what we're going to do with the gold rush? We're going to buy the best metals and mining stocks. And that's exactly the game plan, and we're going to execute it and make a lot of money. That's the plan, and it doesn't have to be more complicated than that, Jason. We're going to buy the strongest mining stocks, and I have a funny feeling this is going to work out really well for us.
I
So
think so too.
if anybody is interested in that, it's only $12.99 for an annual plan, and you can get your money back within 30 days if you don't like what we have to say. But I have a funny feeling you'll stick around if you join us. So, Jason, this was a lot of fun talking with you today about, I wasn't really planning on getting this macro with it, but I really liked where this conversation went. This was a lot of fun.
Oh yeah, and you guys always coming in with great questions. I love that you guys comment on the charts that I'm sharing all the time, and it just gives me more ideas and more things to talk to you guys about. So excited to dive more. I mean, we've been already diving into some of these metals and mining stocks quite a bit. I'm excited to keep diving into this sector. I'm sure the smaller names are going to start to move, and those are going to be some huge winners going forward. So please join us. We talk about this stuff all the time. You get great reports, and you get to hang out with two of the coolest guys in the commodity space.
That's exactly right, Jason. Uh, Very well. We'll end the show here, but I appreciate everyone being here. Wavy McFly, Behave, Elijah, everyone in the chat. I really appreciate you being here and making the show such a fun experience for all of us. So we'll be back here, same time, same place next week. We will see you then. Enjoy your weekend, everyone.
See you guys later.
Adios.